Hey everyone, welcome to episode 4 of Building a Financial Fortress. I thought this week we could start with a market update, then maybe go into some updates on recent Bitcoin news this week, and then finish off with the monthly portfolio update, portfolio allocation for the all-weather portfolio that I maintain. Um, So starting out with the markets, another ugly week. Stocks fell sharply on Friday, largely as a result of the heightened fears of a Russian invasion of Ukraine, and also a spike in near-term inflation expectations, coupled with some weakened consumer sentiment. Um, Speaking of the consumer price index, that report came out last week, and it was a whopper 7.5% is the headline number. But if you dig into the report, it's crazy. Energy is up 27%. Um, Utility piped gas service almost 24%. Used cars and trucks up 40.5%. New vehicles up 12.2%. Um, these are just staggering numbers. Um, so that definitely shocked the market a bit. It was higher than anticipated, I believe, and caused the 10-year Treasury yield to break above 2% for the first time since 2019. Although it did fall down pretty rapidly on Friday um, as kind of a flight to safety uh, due to the concerns again about the invasion, the impending invasion. We'll see if it happens or not. Um, some other news: the deal that Nvidia was going to acquire ARM, which is would have actually caused a lot of issues with Nvidia's competitors, since ARM manufactures a lot of uh, these other companies' chips. That got shot down by the regulators, so that's not going to move forward. It's kind of big news. Disney had a good earnings. They came out with adding another 11.8 million Disney Plus subscribers, which is more than the 7 million consensus, which is kind of interesting. Stock was up 10%. Um, we continue to see protests in Canada uh, to the mandates and lockdowns up there, and now that's beginning to affect the economy a bit because they've blocked some bridges where there's a lot of commerce traveling to and from Canada and the United States, um, particularly affecting the auto industry since there's a lot of cross-border traffic there for all the major manufacturers like Ford, GM, Stellantis, Toyota, Honda. So uh, that's obviously a concern. Hopefully things get better there soon. Um, Talked about the inflation. That was big news last week, of course. Uh, and then, if you look at the indices, Dow was down about 1%, S&P was down about 1.8%, NASDAQ down 2.2% for the week. The Russell was up a little for the week at 1.5%. Best performing sectors are materials, consumer discretionary, and industrials and financials last week. Crude oil was up to 93, almost $94 a barrel. Gold was up 2.9%. And as we said, the 10-year bond yield getting pretty close to 2% as well. Bitcoin had a pretty good week, up 1.7%. And, yet another week of crazy double-digit movements on some stocks. Newell Brands up 14%. I think had good earnings. Freeport McMoran, big copper and gold producer, up 11%. Royal Caribbean up 11%. Tyson Foods up 11%. Micron up 11%. And then we had some big decliners too. PayPal down 9%. AMD down 8%. Under Armour down 11%. So, pretty wild week in the stock and bond market. Um, Moving on to Bitcoin. First week of February has been very kind to the to Bitcoin. Uh, I think it's up 12% the first week of February after a pretty terrible January. Some good news out of Bank of America, uh, uh, saying what we all already know, which is that Bitcoin behaves more like a risk asset and less like a gold type of investment. But they do have a pretty positive outlook on it and price target. Um, and then I think some other big news last week was KPMG in Canada, which is one of the big four accounting firms, bought some Bitcoin and Ethereum for its balance sheet. They didn't disclose how much. Might not be that much, but still, that's pretty big news, especially for an accounting firm, because they tend to be pretty conservative companies. So that was kind of big news last week as well. Moving on to the portfolio review. So I do this every month, and I have what I suppose you would call an all-weather portfolio, highly diversified. Um, Really, just I've kind of given up trying to chase the market, so I just kind of set things the way that I feel comfortable with, which, as I've talked about before, is I skew more towards hard assets and sort of away from definitely away from bonds and stocks, especially in this type of environment that we're in. But broadly diversified to really try to manage any type of a market environment without having to be a trader and spend a lot of time on my computer trying to figure out trades and what to get in and out of. I'll make adjustments throughout the year, take advantage of opportunities, things like that, but I try to not mess with it too much. Buy and hold is always a better strategy if you can make that work. So, starting with cash, cash is about 2.2% this month. That's down from 5.7% last month. I did put some money to work um, in in Bitcoin, a little more Bitcoin this month, and I think also pay some taxes too. So estimated taxes were due um, shortly after last month's report. Um, Stocks, which are mostly in my 401k because I don't really have any other, um, uh, not a lot of other options. So that's about 18% of the total portfolio, which is down about a little over 2% from last month. And again, mostly just because of market declines. Um, that breakdown is about 4.8% large caps, 2.4% mid caps, 2.3% small caps, and 8.5% international. So I'm definitely skewed more towards international in that particular uh, portfolio. And I do have a small trading portfolio that I recently kind of realigned. And I wrote a blog post about that a couple weeks ago. But it's really in a bunch of ETFs that track, more of the cyclical sectors like industrials, oil, materials, um, healthcare, um, and then a good chunk of gold, silver, and Bitcoin too. So really more commodity heavy because of the inflation overhang. Um, and then a little bit of bonds. I've just kind of started buying back in dollar cost averaging with in my 401k, but very small. Real estate is 28.2% of the portfolio, and that didn't change from last month. Um, about a third of that is in my 401k, which is just like REITs, and it's like a REIT fund. And then the other two-thirds is an investment property that I manage. Um, and then private equity is up to 16.6% of the overall portfolio. Was 14.7% last month, so it's up about 2%. I added a fairly large investment this month in a cannabis startup that one of our family is is starting, or is part of it. So we're helping them out, and hopefully they're successful up there in the great state of Oregon. Wish them all the luck. It's kind of exciting what they're doing. Um, and then Bitcoin. Bitcoin is up to 23.2% of the portfolio, up about 2.5% over last month. And and it's a combination of things. I've got a little bit of Grayscale Bitcoin Trust. I've got some MicroStrategy shares. Um, I've got Bitcoin that I hold directly in a hardware wallet. I've also got some Bitcoin in a Bitcoin IRA. I did flip that IRA into a Roth this month, so I'll be paying those taxes this year. But I think in the long run, I'm going to be very happy with that decision. Um, and then I have the MicroStrategies in a Roth as well. So overall, I think that I feel good about that. And if the Bitcoin position ends up being 50% or 100%, 75%, whatever, of my portfolio someday, that's fine. Not selling it. Just going to keep accumulating. Um, and other than that, I just kind of have gold, silver. Um, I've got an investment in Masterworks, which is uh, you can buy, shares of artwork, which gives you an opportunity, again, as an inflation hedge, and usually you can't buy a $2 million painting or a $10 million painting, but you can buy shares in them, and they're registered with the SEC. And I wrote a review on them, posted on my blog a few months ago. I'm pretty happy with it. We'll see. They do take a pretty hefty fee out of the back end, but if you see decent appreciation in the artwork, then it should be a good investment. And it's a more of a long time frame. It's probably a 5-10 year time frame for those. So that bucket is 9.8%. That's up about 1.5% over last month. So Overall, the portfolio, given what a terrible month it was in the markets, only down about 0.5%. So not feeling too terrible about that. Um, and you know, um, much better than I think the prior month I was actually up 1.3%. But the month before that, and then December, I was down 7%. So I took kind of a beating that month. But overall, everything's been holding up pretty well. The all-weather portfolio seems to be working quite nicely at this point. Um, so I'm gonna, continue to maintain it and not not make too many radical changes. I think with the Bitcoin, my plan is just to continue to dollar cost average. So I do buy a small amount with every paycheck, and then when it gets to a sizable enough amount, which is usually every couple 2 months or something, I'll move that over into the hardware wallet. And I do still buy Ethereum. I'm gonna have to admit that. I stake it. I get a 4.5% interest on it, and I kind of view that more as like almost like investing in a startup or a technology venture. That's kind of how I look at that. So it could be quite successful or not, but I do have a little bit of diversification there, but I do pretty much avoid all of the other coins that are out there. Um, I just can't make sense of it, and I think there's going to be a big shakeout in the cryptocurrencies. If it's not happening already, it's going to happen soon. Um, Very similar to the dot-com uh, bubble and bust, where there were a lot of internet companies that had great business plans, lots of fundraising and shareholder money, investor money rolling in, but no profits. And they were changing valuation metrics to well, we should be really be trading on a multiple of sales, not earnings. And it reached a peak, ironically, right around the time of the Super Bowl, and they had pets.com, and there were all these .com commercials in the Super Bowl. And then shortly after that, everything cratered. And that's what a lot of people are saying about this Super Bowl, which is coming up tomorrow, is there's going to be a lot of crypto ads, on the Super Bowl. Crypto.com's got one, and I think Coinbase has one, and maybe some of the other ones too. Um, so a lot of people are saying, "Well, this is it. This is peak crypto, and it's all downhill." And I don't know how many there are now. It seems like every time I look at the list on CoinMarketCap, oh, okay. So according to CoinMarketCap, I just logged in here. There are 17,514 different cryptocurrencies. Let me say that again. 17,514 cryptocurrencies. Um, let's see. Trending right now, Libero Financial, number one. Number two is a coin called No Shit. And, and number three is Shiba Inu. Um, Biggest gainers, Ninja Floki, Tuda Birds, and Board Floki Yacht Club. Good. So, so that's the environment. And the market cap is 1.9 trillion in total. Um, Bitcoin is 42.3% of the market cap. Ethereum's 18.2% of the market cap currently. So Bitcoin, of course, has the number one market cap, currently 801.6 billion, followed by Ethereum at 348.7 billion. So if I had to guess, I'd say Bitcoin and Ethereum will probably be around after the implosion. Although short term, maybe the values may take a hit when the crypto verse goes through its thing. Um, but I would look at that as a buying opportunity for Bitcoin. I mean, anything under, geez, if it got under 20 or 15, I'd be I'd definitely be adding a few coins at that level. And just tuck them away in your wallet and wait. And it's like gold coins or silver. You buy those things and you stick them in your safe, and 5 or 10 years later, you're happy because inflation doesn't go away. I mean, this 7.5%, even if they get it back down to two, you still have 2% inflation every year. So what does that mean? Well, that means that a dollar today is only worth 98 cents a year from now at 2% inflation. So um, it takes a bit longer for your dollar to diminish to nothing at a 2% inflation rate. Um, and obviously, at a 7.5% inflation rate, it's diminishing a lot faster. But yeah, I talked about this in the last episode. Um, really think Bitcoin's just got the advantage of the limited supply, and the digital nature of it makes it very portable, very easy to self-custody uh, as compared to gold. Although I think gold and silver are going to do really well. I mean, they rallied nicely on Friday, and if this warmongering business continues, um, I think you could see gold and silver make a nice move, and oil too. Oil's, you know, obviously been up a lot, and uh, looks like that could continue. Um, so I think if you want to be invested in the stock market, you got to be invested in not in tech. It's got to be commodities, gold, silver. I think Bitcoin's good. Um, Industrials, materials. Um, those are those are probably gonna do better in an inflationary environment. Um, and of course, if we get into a recession, you're going to want to have the utilities, um, and the consumer discretionary, type stocks too, because those are gonna protect you on the downside. Uh, but going back to the cryptocurrency, I mean, 17,514 cryptos. Yeah, that's just not sustainable. I mean, literally, there's like a new one every day. I think there's one there. Let's see. There's a lot of Elon coins. Oh, yes. There's Doge Elon Mars, the dogs of Elon, Elon Goat, Shib Elon, Elon Jet, Astron Elon, Elon Gate, Shiba Elon Verse. There's one called Elon Balls, Elon Tech, Elon Grab, Elon's Marvin, Elon Doge. I mean, it's ridiculous. Elon's Rabbit, Lord Edge, Elon Floki New, Elon's Pets, Son of Elon. So yeah, there's going to be a shakeup in the cryptocurrency space, and a lot of people are going to get wrecked, as we say. So keep stacking Bitcoin and hodl away and buying the dips and when all this stuff shakes out, it'll be interesting on the other side. I do think though that the regulatory environment for definitely favors Bitcoin as a commodity. And I know a lot of people worry about regulation, but I think that Bitcoin is probably in the best spot, and really any other coins that are proof of work versus proof of stake are probably going to be okay. But the government in the U.S. is really coming after uh, the um, you know the DeFi and some of the cryptocurrencies that were uh, issued tokens in an initial coin offering, because that's basically like selling shares of a company without registration, which is against the law. So there will be some kind of a crackdown on those, but my overall thesis on regulation is that I think regulation is going to be terrific for crypto because it'll help establish the rules of the road, which will then allow institutional investors to jump in without any concern, or with a lot less concern than they have now, which will just increase demand for the tokens, which is then going to drive the market higher. So fixed supply, increasing adoption is key. And so clarity in the regulatory space. And at the end of the day, I think the government just wants to collect their taxes. They just don't want people moving coins around the world and, buying and selling stuff, coins without reporting and paying their taxes. So um, you have to pay your taxes. If you sell an appreciated asset, doesn't matter what it is, you're going to be paying taxes on it. If you're smart, you figure out how not to sell your assets and borrow against them or do something like that so that you don't have to trigger those taxes. But um, anyway, so it'll be interesting to see how that unfolds. So I've kind of rambled on long enough, I think. Hopefully, you enjoyed the portfolio update, and I think every week I'll continue to provide kind of a market overview and any new Bitcoin news because I do think it's important to stay on top of that. Hopefully, you enjoyed the podcast. If you have any ideas, leave me a comment. Um, also, go check out my blog. It's fiq.blogspot.com, Building a Financial Fortress. Check out my post there. Um, and I will catch you guys next week. Have a great week. Take care. Bye bye.